So hello people, good day to you. Hope you're doing well. I just quickly wanted to record a session about my trade. I will also explain my setup today in little bit more details than I usually do. I will also try to keep it very short as I have office now. So I had my cup of tea now. Tea is finished. So now let's get back to the business. Yeah, so this was a very quick trade. See, I shorted this candle 138, shorted again 3 contracts more. First it was 5 micro contracts, then 3 more micro contracts after in the very next candle, and then closed in right after 2 minutes. So total trade lasted less than 4 minutes. Like, these are 1 minute candles, 1 2 3 4. So I shorted again and then closed within next 2 minutes, so around 3.5 minutes. So let's just say, so I made around, let's just not talk about money, but yeah, it was maximum it went for like $350. I closed around 300 something. So, and why I closed it, I will explain that. My setup suggested me to close here, so I closed and I was right. So first thing, the thing I look for is Kraken correlation. So I'll quickly show you. See, notice this blue line. This blue line is the market open for the day. I'm not talking about midnight open, but the very first candle that prints that day. It happened. This timing is in New York time. So in New York, you can see that it's in evening UTC -4, 18 p.m. So 1801 candle formed here. So this is the this is the day open. Let's just say midnight open is the true day open. That's how we refer it. So notice this blue line. Now as I explained, I look for like triad. I mean, combination of 3 indices, S&P, NasDaq, and the Dow. So in S&P, see, this blue line was crossed here after Asia kill zone. This Asia kill zone was over and this blue line was touched. Now let's check Dow. Once the Asia kill zone is over, it was not touched. Also, if you see it, when it was reversing from this bottom here, it only went to the 0.62 level. It did not go high. Now check this one. It went more than 0.79 here. If you notice this, where my cursor is, it says 0.79. So the Kraken correlation has been established. Now I needed 2 things. First, my targets, and like how far market can go, so price can go. So I do that via standard deviations. So you can see that first I find Kraken correlation in triad, then I grade. I will explain what grading is. Then I wait for time meets price. I did not wait today, but if I had waited, I would have made like 4 times more like money than I did. So market has its own way of showing me that when I do things right, I get rewarded. So once time meets price, you take a trade and target standard deviations. So I will show, this is the like same setup I follow every day in and out, and I make around $300 very easily. $200 to $400 is like piece of cake. So so let's see how, I mean, so far I've shown Kraken correlation in triad and now grading part. So what I did is I recently learned this. First, let me remove few things. I mean, after trading for so long, I have not learned to keep my charts clean. That's very bad habit. So what I did is, because I like seeing this chart so messy, and I mean, sometimes, most of the time it pays well, but I'm learning to keep them clean because I've started liking clean charts because I'm reducing the distractions here. So do you see this high? This high, and that was the current lowest low because the liquidity was taken here. Here liquidity was taken. So this was the low that I considered and this was the high. So now what I do is I grade it into like 4 quadrants. You see that this is my tool. Let me make it more visible. You can see these 4 fat lines and you can see how they are graded. So my target was, if price has to come down, I mean if price has to correct, it should do from the upper half of the portion. And since it was consolidating there, my target would have been like, I would have felt much better if price has taken this liquidity then turned, but it did not do that. It created crack in correlation long before taking the Asia high. So it shows that how bearish market was, and since I had to take this in like 2-3 minutes, this is why I took a very short trade and I was done, because I have made my $300 target. I target 400, but 300 is like close enough and I'm very happy with that. So then I used my fib from this high to this swing low. I mean, this is the second category of grading. First one was dividing it into 4 quadrants, and if you study each quadrant, what's happening on the each line of the quadrant, you will find something really amazing. And if you study them on a smaller time frame, you will see even better. Like, see, there is a fair value gap as 0.25 level, 0.25, like 25% level. You see that fair value gap, it stopped the price. Price returned from this place. And if you research more about it, you will see more most amazing things. Your trading style will change. I learned about this grading yesterday. I mean, I've known about it from a long time, but used it yesterday for the first time, and I used it today and I made money. So I'm very happy. I would not have felt confident taking this trade had I not used the grading process. Though there was one more indicator, not indicator. I don't like indicators that telling me when to trade, when not to. But I use measurement tools. Every indicator I use, that's for measuring the price and time, how far they have gone. So I do not like to use anything else to indicate. Like, I do not use RSI, I do not use VWAP or anything, or moving averages. I hate them. So yeah. So, and now I saw that the price went down, took the liquidity here from New York PM session. You can see that here. And so this swing low became the like high probability for the target. Now price has to go in the premium. So if you notice, this upper half is the premium and this lower half is the discount. So from here you can look for a short, from here look for a buy. So this is how the logic works. So I was bearish, so I so even though if you look at the high time frame, price was bearish, but I checked it later, not at the moment when I took the trade. I simply saw the crack in correlation and I know that it will be good enough for a short trade, at least till here. So what I did is it was very like cool thing to notice this 7.5 sorry 0.25 level, and looking at this price being hit at 0.79 Fibonacci level as well in the retracement, which is very, very good. ICT's OTE concept, optimal trade entry, is in play here. So I was very confident that price is going to reverse. So all I had to do, I had a very little time to make a decision. And yes, so what I did, when I checked this OT level and this grading, I was already confident that price will, if it just wigged it, wigged it, and then it inversed few like PDRAs, like this breaker block. So this was inversed. I was sure that now price will at least take this low and then this fair value gap. I was 100% sure, because this order block was inversed. Sorry, this breaker block worked. Price came below it, then hit it back, and then corrected. Also, what I did is, let's remove this. Now what I did, I took this swing high and this recent swing low, and then I graded it again. These are Fibonacci standard deviation I use to like set up my target. So my setup is, what price does is, first price hit 1 to 1.5 level and then retraces. It may retrace back to 0 to 0.5 level. Let's just say it did not do that. It showed a shallow retracement and then strongly went back to the 2 to 2.5 standard deviation. And now if it did not reverse from 1.1 to 1.5 level, if it reversed from 2 to 2.5 level, it will again hit this 0 to 0.5 level. This happens every single day, and I trade this. I make money from this almost every day. And then price hit this fair value gap while hitting this zone, and then price reversed. And the final target is this one. Actually I marked it 3 to 3.5, but it is 3.5 to 4, or in some cases 4 to 4.5 is a cool target as well. So you can see that. So but I took the trade very early. I took shorted from 1 to 1.5 level, so I knew that in 2 to 2.5 price can strongly reverse. This is why when this price touched this level, I instantly closed all my contract sizes, because I did not do too much of analysis. And I had woken up and like on my system, and I was started trading that. I like punched 5 contract, then I saw that I have a very short distance to go, so I punched 3 more contracts so I can make more money, and closed all of them here. I did not take any partial and waited for the price to retrace back and then jump here. So but if I had waited, I had this reward. And I will show you when time it price thing happen. ICT macros 10 minutes before the hour and 10 minutes after. So I hope these lines are visible. Yeah. So this is the time meets price situation here in between these two lines. Time meets price. So now when time at price, you look for the PDRAs, price can touch and reverse. So there were a lot of things. This block, this fair value gap, this 0 to 0.5 zone, like every inch of it was valid. And if you notice, this 0.5 level of grading is also there, which makes it highest probability, because candles did not close above it, only it wicked through. Wicks do the damage, bodies tell the story. Since the bodies were closing like 1 2 3 4 5 6 candle did not go through this. 2 of them touched it and then came back. So it was like highest probability. But by this time, by this red line, when time at price, I was already turned off my system and gone away, because I take a small trade and be very happy with it, leave it to the next day. Closing in green is like psychologically very healthy for your mind. You will be feeling better when you are starting the next trade. So now imagine if I had taken this trade, so I would have expected this fair value gap and this level to like inverse price back, or this inverse FVG to affect it. Suppose I had waited and did not take this trade from here. So next best point to take the trade was from here. Why? Because this fair value gap was inversed, this one was inversed, this one was inversed, and this is one single candle. I might not have had chance to like trade this if I had waited, if I had not shorted from this very candle. Though 2-1 was like really good candle to short, because at 2-1, like 2 hour, like 4 hour candle starts, it wigged up and then fell through, and target was this low. So it was a easily like 2 hour trade. If I had risked around $200, I would have made another 400. or more if I had risked more. So, and if I had targeted 3 to 3.5, let's just say I was crazy enough to target at least half of it, it was easily around 2.7, almost 3. So let me first log out from Tradeweight. So if I had taken suppose a trade of 4 contracts, it would have been like through 235 risk and around 640 profit. If I had gone all the way to my target to -4, it would have been around 700. So yeah, that's fine. There should be no point in like being greedy. So that was my trade. Everything was there. Kraken correlation, triad, then graded, time at price, trade, target. So I mean, this is a really bad habit I've developed, that I trade before time meets price. If I stop trading before the time meets price, it will increase my profits by 3 to 4 times at least. All my losses that happened in last 2-3 months happened because I traded before time met price. So like, because my setup appears, I jumped. Market often lure you into like false traps. Before market has to clear like a sell side, market will run higher. Suppose if you were a novice trader, you would have thought that now market has reversed, because market print the same pattern when market is going up, like making a lower low, then touching this CISD level, change in state of delivery, and then moving forward. People would have thought inversing this FVG makes it bullish, but no. Market first clear sell side, sorry, buy side here, and then came down. So from here, market manipulated up. So this zone either expands or manipulate. Since I was bearish, this whole thing was a manipulation. I could have shorted from the very moment, from the place where it's all started. Like this candle is a perfect order block kind of thing to like short from, once price has like come below it and then tapped back and shorted. So, and now if you, even if I grade it, let's look what happens the way I grade it. So this is swing low, this is swing high, and you see this perfection. 1 to 1.5 level has been crossed easily. Now what price has done, and it did not just touch this level. Look for the next one. 2 to 2.5 is the highest probability reversal level, and you can see that price has reversed from it. See, and price, what did price do? Took the sell side liquidity. Why? Let's measure it in standard deviation. Recent swing. Yes, see, price again went where? 2 to 2.5 level. You see, this is like magic. Depending upon what kind of standard deviation you are using, price works like magic here. Sorry, yeah, 2 to 2.5 level, price touched it and then reversed. Do you want to see another thing? I have not graded it, but I'm sure it will be something useful. I'm grading it now here, and where price landed. Let's see, did it reverse from 1 to 1.5? Yes. And you'll see it touched this, almost touched this zero line. If you check here, yeah, it came below 0 to from this to this level where it retraces back. In these cases, it retraces to 0 to 0.5. You can see same thing happening here, 0 to 0.5 retracement. It came even below it and then retraced. So you can see price follows same patterns. So this is all for today. I mean, I've taken a long time. I was not planning to take that long. So this is all for today, and I hope you like my video. Please share and subscribe as well. Usually I don't ask for it, but it's okay. If you love my content, if you like my content, if it adds any value to you, please do consider sharing and subscribing it. Good day. Bye bye.